Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekook.com and on Twitter using the handle thekook. Stephen, good morning.
And a very good morning to you, Sean.
Massive week coming up. Before we get that, we better have a quick check-in on credit and retail sales and, building approvals and stuff like that. Last week, I suppose actually the big news last week really was the US Fed decision.
It was, and that sparked a rally in stocks. It sparked a rally in the bond market, which had been absolutely hammered for the last couple of months. Took relief from the fact, not so much that they were on hold. Everybody thought that they weren't going to be adjusting interest rates at the meeting. But the chairperson of the Federal Reserve, Jerome Powell, came out, and while he said that there's still a possibility of a rate hike, it was seen to be quite dovish. And given the extent of the sell-off in the bond market, given that equities had been tracking sideways to down for some period of time, there was this proverbial relief rally. And we saw bond yields come back down. We saw the stock market have a couple of powerful days as well, which was good news, I suppose. But we also had the likes of the ECB, the European Central Bank, the Bank of England, all on hold as well. So we've got this growing probability and quite a high probability that the rate hiking cycle globally, in general terms, is reaching an end.
That would be exciting. What about we've got a big week coming up, so I want to get onto that, but just the local data last week, was there anything of particular interest?
The local data, yes. Retail sales a touch stronger than expected, and it was linked to sort of warmer weather. So people sort of checked their wardrobe and found out that their old clothes either didn't fit or were so much out of fashion that we had a bit of an uptick in department store sales. Not a terribly strong number, but it was just a little bit better than the market was really assuming. The credit numbers, again, a touch stronger, but mainly it was business credit. So it's in line with the business sector ramping up some of its capex, which is a theme that we've spoken about in the past, that one of the reasons the economy is holding up reasonably well in Australia is that businesses are investing and they're buying machinery and equipment, and that was showing up in the international goods trade balance, which saw a much narrower surplus, down to about $6 billion, down from $9 billion. And it was all due to imports kicking high, imports of machinery and equipment, which dovetail perfectly into this scenario where the capex side of the economy, private sector business investment, is doing okay.
We like that. Let's move on. A couple of big things tomorrow. Obviously, the Reserve Bank, but who are you going for in the Melbourne Cup?
Melbourne Cup Gold Trip.
Two in a row, you reckon?
2 in a row. It's just a fabulous horse. It ran well in the wonderful Cox Plate. So Gold Trip's it. And I'm just looking through some of the other Mar Eustace horses. I've got a sneaking suspicion that tomorrow they may get close to training the trifecta, which would be a phenomenal thing for those absolute wonderful horse whisperers. Yeah.
No, we digress somewhat. We've also got a Reserve Bank decision tomorrow.
Oh, that's right. We do too. Yes, I'd almost forgotten about that. And that's going to look. That's a fascinating one, because I think on the last survey that I saw from Bloomberg, 33 out of 35 respondents to the survey thought that the RBA would hike 25 basis points. There were 2 sort of stragglers who thought, possibly no change. But the curious thing through the course of the week, after that CPI result 10 days ago or so, which sort of sparked that rate hiking forecast frenzy, if we can call it that, is that the probability just got scaled back a little bit. So for tomorrow, it's about a 60-40, approximately 60-40 proposition that they will hike. So it's by no means that roll gold certainty that, usually we go into RBA meetings and, they're definitely going to hold or they're definitely going to hike. This one is, it's likely, but by no means certain. So it's an absolutely fascinating one, because the Reserve Bank, as we just mentioned, that other central banks are on hold and have been on hold for a few months. The economy here is slowing, and even though that inflation number was a little higher than expected, they could hold. They might just hold, knowing that, and sort of put out the commentary that yes, the rest of the world is seeing lower inflation. We're seeing lower inflation. We're on track to get inflation back to that 2 to 3 target range. The labour market's starting to soften a little bit. And it's a tough call. It's genuinely line ball from the chatter that's going around. The board papers, the papers that the Reserve Bank present and give to the board members, at the end of last week, had a recommendation of either on hold or a 25-point hike. Of course, that's what they're going to be discussing. The weight of the board, tough call, a really tough call, this one.
Damned if they do, because rates are going up. Damned if they don't, because all those economists out there will be upset that saying that they haven't signalled what they're going to do.
Correct. It's one of those ones. Well, there's a little bit of a fanciful call that, given that the cash rate is 4.10%, so not in those nice quarter percentage point increments, they might hike 15. You heard it here first. I wouldn't put my money on that. I'll put it on Gold Trip instead.
I'll put it on Gold Trip instead. The other really interesting thing this week, of course, is that the Reserve Bank's going to release its statement on monetary policy. It's going to have its updated forecast for inflation and unemployment, Stephen.
Yes, they do. So on Friday this week, they put out their detailed analysis of the economy. They usually use that as an opportunity to really put a lot of flesh on the economic debate, international economy, financial conditions, inflation pressures and the like. So the critical thing for the markets will be, particularly after the decision tomorrow, hike or no hike, will be what's its forecast for inflation? Have they dramatically changed those from the August statement on monetary policy? What's the outlook for unemployment? Is it still expecting unemployment to hit 4.5%? So we'll see not only the detailed analysis of the minute details of the economy, but the hard and fast forecasts. What are they actually saying is their view that for 2024 and 2025, where the economy will go. So statement on monetary policy is always a good read. It's always about 60, 70 pages of stuff for us economists to digest.
Stephen, have a great week and good luck on Gold Trip tomorrow.
I'll be cheering at home, and I'll be cheering home a rates on hold decision from the RBA too.
We all would cheer that one home. That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on Twitter using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.